Luke, thank you so much for joining us here at Empower. I hope you've been having some interesting conversations with your colleagues. It's challenging times, such a volatile period in terms of geopolitical but also economic. Tell me what you're seeing as where to invest and where you're looking for safer havens. Are there any at the moment?
Yeah, look, it's been a great event so far. We've had some very interesting conversations. The real challenge that we're seeing when we speak to investors is, what do I do from this point forwards? Obviously, it's been very challenging the last 6 months, especially in risk assets. If you think about equity markets and the correction we've seen since November and December, a lot of that is rational. It's driven by change in inflation expectations, change in Fed policy, and how that's trickling down through into equities and how you're discounting longer term growth assets. But we've seen such a significant correction. Now the question is, am I at a point where maybe I've got an interesting entry point into some of those longer term growth themes?
And what would you say those growth themes are? Because obviously there's so many factors at play at the moment, and where would you see those opportunities lying best at the moment?
Well, at Goldman Sachs Asset Management, we've really tried to view the world, at least from a long-term perspective, through the lens of 4 key megatrends: technological advancement, new age consumer, future of healthcare, and environmental sustainability. And actually, we still think those are very critical drivers of demand and hence can be critical drivers of growth for a lot of companies aligned to them within the equity space. The key question is, how viable is the technology or solution that business has, and how commercial can it be in a world where access to capital and pressure from just exogenous forces is a little bit more significant? We still see a lot of interesting entry points, given you've seen correction in markets in some of these areas by 50-60%, but you have to be much more selective today than you may were 6 or 9 months ago, which was much more of a trust me market than where we are today, which is a little bit more of a prove it to me market.
So that's where some of the challenges and opportunities lie. How do you begin to navigate when there's something that happens which is perhaps very unpredictable? For example, the war that's now happening between Russia and Ukraine. Is that something you can scenario plan for in a business like yours?
Well, I think when you build an overall portfolio, it's impossible to know every single outcome or plan for every single scenario. And I think it's fair to say we and many others were not expecting the escalation in crisis that you've seen in Russia and Ukraine, but you can hedge that in some capacity through diversified multiple asset class portfolios.
And in light of that, what would you say when an investor is looking for expertise? What do you need in your team when you're facing these big challenges?
Well, I think what we need to be is, first and foremost, nimble. You have to adapt to that new world order, that new scenario, but you also have to be true to your principles. So we're investing in equity markets. We are by nature long-term, bottom-up fundamental investors. We can't stray away from that, even if the environment is becoming a little bit more complex or potentially a little bit more risk averse. If anything, we have to reassess the foundations of the businesses we're investing in, understand how they're positioned for the next 5 or 10 years, and if some of that exogenous concern and risk aversion is giving you an entry point into some of those long-term secular growth themes, that can actually be quite interesting as long as you can weather through that period of volatility and uncertainty.
What are you as a business looking for in terms of perhaps partnerships at the moment when you're looking for pockets of expertise in these areas, or is it something you try to build from within?
Well, so thinking about it again from the perspective of investing in equity markets, what type of companies are we looking for? What type of management teams are we gravitating towards? First and foremost, we want businesses with some core competitive advantage, some barrier to entry that gives you at least some pricing power in what is clearly a much more inflationary environment. I think also when we look at management teams and we look at execution capability and expertise within that context, we want people who've been through multiple scenarios, through different cycles, through different challenges, have suffered from some of those in the past and know how to adapt to what is clearly a very different dynamic today than we would have had even 6 months ago.
And do you need a leadership place in a team in place as well that has a nimble attitude and is able to see those opportunities and seize on them and perhaps be more nimble than this industry has been in the past now?
I think you always have to be adaptive and you always have to be nimble within that. I think one of the critical attributes in terms of building a team that can succeed in achieving that is diversity of thought and diversity of opinion. And so one of the great attributes of our business within Goldman Sachs Asset Management Fundamental Equity is we actually have more than half our assets managed by female or co-managed by female-led teams. And so just bringing in disparate perspectives, be it different forms of diverse perspective, actually gives you a far better chance of success as you're trying to assess what is an ever-changing environment.
What conversations are you having here at Empower that are useful to you? Is it interesting for you to hear? You talk there about diversity of thought. This is a great forum for that, isn't it?
It is, for sure, yeah. No, I think with the conversations we've had, a lot of it has been centered on what is happening in the world, how do we translate that into investment views? And I think more than any other discussion, it's where are we in the context of finding a floor in equity markets? it's very hard to predict that, right? There is clearly downside risk further from here if inflation continues to run rampant, if we don't see some degree of normalization in what's happening in Russia, Ukraine. But at the same time, valuations have adjusted so much that actually for long-term investors, you could be looking at a very interesting wealth creation opportunity if you can manage that volatility and understand the risk that you have. And we don't need to see significant positive improvement to have some upside surprise to equity markets over the next 6 to 12 months.
So some really interesting perspectives here at Empower. Thank you for sharing yours with us today. It's great to talk to you.
Fantastic. Thank you so much.